Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite studio in Times Square, New York City, we have Louise Phillips Forbes, an agent at Brown Harris Stevens with over $5.5 billion of New York City real estate sales. Louise, it is great to have you with us. Welcome to Trade Talks.
Thank you, Jill.
I love talking about the New York City real estate market because every couple of blocks is a totally different neighborhood.
Absolutely. I mean, the city has been on fire, but it operates very differently than the rest of the nations because we are leaders historically, no matter what happens in our moment, whether it's September 11th or bank crises, we do respond differently.
And we're a very resilient city, that's for sure. I mean, remember
Amen.
coming out of 9/11, but the Upper West Side is so different than Tribeca, than to the Upper East Side. Every neighborhood has its own vibe. Is there one that you're seeing more activity in than the other?
Well, the New York real estate market is always local because what is happening on the Upper West Side is different than Tribeca, for example. And there are sectors and niches where the market finds opportunity, and that is something where I think we've experienced so much more efficiency because we have inventory where the rest of the markets across the nation do not.
So would you say it's a buyer's market in the city?
Absolutely. I mean, listen, first of all, the buyers are the market, one data point at a time. I mean, if you think about when I'm showing my sellers, they have to understand that the buyers are the market, and we are experiencing opportunities where sellers, you know, it's an efficient market, but sellers are not, they're having to make concessions. And I think that we're going to continue to see that, but interest rates are going to pull back, causing another shift in the market where opportunities are going to continue to be revealed.
So what are some tips for buyer success? Because this is a very competitive market.
Yes, well, the 4 tips that come to mind is we have to adjust as a buyer your lens, and you're going to adjust it by looking for a diamond in the rough as opposed to done, 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 and prolong your renovations just because you don't want to pay somebody else's mortgage by continuing to rent. Secondly, I think the financial, you know, we always say on interest rates when they're shifting, you always, you know, you marry your home and you date your rate. So be open to those changes. And then lastly, I think there are a lot of opportunities in the New York vertical market where buildings that are large, they have, you can purchase a building where your operational expenses and your budgets are drawn into your maintenances. So you have your gas, electric, cable. So that causes you to be able to manage your budget. And I think that lastly, financing, being open to different options for your financing, buying down your mortgage or interest only. For people that are commission only or have a big bonus, open up and have your conversation with your professionals about an interest only opportunity.
Let's talk about trends. What are you seeing in terms of purchasing preferences? Are people looking for the buildings that have the gym and the supermarkets and everything in it, or are they still going for individual units such as townhouses, or is that really just a budget question?
I think that the offer, when you live in a vertical market like ours, they do offer a lot for people. So the new development lifestyle buildings are always going to attract a more international, but also a local person that's accomplished where they want to come home, and especially when you have people, and since COVID, our working patterns have shifted. So Hudson Yards is a great example of a success story for people that want to be in their home but have access to a lifestyle. Yet you're going to have people that want to be on the offbeat and commute to work within the city. I think there's a lot of opportunity and trends that we're seeing that people are going to be, first-time buyers have shifted a little bit. They've been priced out with interest rates. So cash is still king today and will be, and there's a lot of cash in New York. We still haven't seen a lot of the international buyers coming back to the table. I expect that will happen soon.
When you think about purchasing in the New York City real estate market, how much runway should you give yourself, or is it just that competitive that once you're ready to go, you go, or can you research it for a year or two?
I think it's really, listen, real estate in New York City, you have to want to buy.
Right.
Because there's always going to be an excuse not to pull the trigger. And being educated, leaning into wanting to own is so important to part of the data. And it's, again, I come from a background of all what my parents did were for our education and wanting to own. And so I think that the runway that you need is that it takes 6 months to get educated and to close. Because unlike this out of the city or houses, you can close in 3 days, 8 days, 20 days. It's hard to do that in the city.
Well, especially if you have a co-op, right? So I mean, that's a
Yes.
whole other process in and of itself. I mean, that's separate from getting the mortgage and everything else that you have to.
There's some great opportunities in the co-op market because people don't want that scrutiny, and so therefore there are less people in that pool. So that's another opportunity for buyers to consider today.
All right, Louise, we appreciate the insight. Thanks for joining
Thank
us
you
on
so
Trade
much.
Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.